Hey guys, you're welcome back to my YouTube channel. If you're new to this channel, don't forget to hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. On this channel, I teach different strategies that will make you profitable in the financial market, even if you are a beginner. And I have had a lot of people who has had a different perspective about the market with the YouTube video, like someone like this. So if you want to join the group of profitable traders, you should subscribe to this YouTube channel. Okay, guys, so let's go into the business of the day. Like I said in my previous video, I am going to make a video as regards point of interest, and I'm going to give to you guys, just show you the point of interest you should mark out. Don't forget to watch this video till the end so that you can get all the explanation. I am going to be explaining on charts, and I'm going to give you different secrets to chart to using all of these points of interest. So don't forget to watch till the end, guys. It's really going to be beneficial to you. So let's get into the business. I'm going to be teaching just 3 points of interest today that is very valid and that you can even use. Even if it is these 3 you want to be using, you are very good to go. Remember that you should plan your trade and trade what you have planned. Guys, don't forget to trade what you have planned. Ensure that you have a trading plan. Also, if you want to get books on becoming a profitable trader, you can check the link in the description box. I'm going to put a link there whereby you can get the books to become a profitable trader. You can get different books that you want. Okay, so like I said, let's go straight into our our points of interest. If you are here to watch the previous video, just go back to it, guys. It's so mind-blowing. I spoke about points of interest, how you can recognize points of interest and the like. So let's go straight into it, how to recognize, how to pick out your point of interest and which point of interest to pick out. Now, we have 2 types of point of interest, of which all of these points of interest fall under. We have the primary point of interest, we have the secondary points of interest. I have made a video about that. You can check my YouTube channel to also get those videos. We have the primary point of interest, and then we have the secondary point of interest. So you just have to add one of them to your trading plan. Personally, I love trading primary point of interest, but when I get to the market and the secondary point of interest is playing out, I just join into the market. And there is a reason we always have secondary point of interest playing out, of which I am going to explain to you. Now, when we have distance and momentum in the market, when we have distance and momentum in the market, we are expecting that market does not have the energy to come back into our primary point of interest. Hence, market will want to use our secondary point of interest. One of these points of interest that retail traders talk about is resistance turned support. Some of them say support turned resistance, but I'm going to teach you the candles to mark out in this video. So you see, this is our secondary point of interest. Our secondary point of interest, there's a way you can identify them. You don't just say this is a point of interest. No, guys, I gave a detailed explanation on points of interest, the primary and the secondary. So just check the channel and watch it. So we have our secondary point of interest around this area. Some point of interest can get to this area as secondary point of interest, and then it's going to be in alignment with a particular candle created, and we'll have our movement to the upside. Markets will not be able to come back to the primary point of interest. So let's get straight into it. So the first one I'm going to be talking to you about is our sponsored candle. Now, when you hear the name sponsored, candle, what comes to your mind? Talking about sponsored, it simply means this is a particular candle that initiates a particular move. Sponsored simply means it is the candle that initiated a particular move. You know, candle is different from move, guys. That particular candle was the candle that initiated a particular move. So let's say we are in an uptrend. Let's see where our sponsored candle is. Now, if we are in an uptrend, our sponsored candle is the last down candle that takes out liquidity, that took out liquidity rather. That is our sponsored candle, the last down candle in an uptrend and the last up candle in a downtrend. The last down candle in an uptrend, the last down candle here that took out PO high. It is only when you want to refine and then you notice that a particular up candle around this area was the last one that picked out PO that picked out liquidity. That is when you just refine it to be that candle. I'm going to show you all of this on chart. Now, the last down candle is our sponsored candle. Now, in a downtrend, so if we're in a downtrend, the last up candle around this area, the last up candle at our primary point of interest is our sponsored candle. That was the candle that initiated, that was the last candle created before we had an impulsive move to the downside or before we had an impulsive move to the upside. Those are the last down or the last up candle that was created. I'm going to show you that on charts, guys. Just stay tuned. Okay, the second one I'm going to be talking to you about is our base candle. Now, let's assume we are in an uptrend. Imagine we are in an uptrend now. Then market creates this particular move. Come back, just create just this small move and give this movement to the upside. You can see we have our rally, base, rally. Now, this particular base, it is a base that you will notice that market ranged in between. Market was ranging at this particular base. Markets will definitely range at this particular base. Don't confuse this for a base. Don't confuse this. Hold on, guys. Don't confuse this movement for a base. This is not a base. It is a return to order block. This is a return to order block. This is a base. You just see market struggling. In fact, because of this momentum to the upside, markets will be struggling to make this particular pullback. Markets will be given that struggle to make this particular pullback. And after that, if it is exhausted, the markets will continue in an uptrend. So don't mistake this for rally-based rally. No, this is not a rally-based rally. This is a rally-based rally. We also have drop-based drop in a downtrend. We have our drop-based drop in a downtrend. So let's see something like this. Then market does something like this. Drop, base, drop. Now, this also happens in Wyckoff. You can use Wyckoff in identifying this. Now, we will have drop, base, drop. Most often in Wyckoff, they call this reaccumulation or redistribution. This is redistribution for them in a Wyckoff. This is redistribution in a Wyckoff, and this is reaccumulation in a Wyckoff, according to the Wyckoff terms. Okay, so we have our drop, base, drop, and then we have our rally, base, rally. Now, don't confuse this. Don't confuse this for a drop, base, drop. Don't confuse this. Don't confuse this for a drop, base, drop. This is a normal return to order block, not a drop, base, drop. Sometimes you're going to see the market struggle at that base. Market will struggle at that base. That is when you know that you have a base. We have the rally, base, rally, and we have the drop, base, drop. Now let's talk about our breaker block, which is inside our secondary point of interest. It is in our secondary point of interest, our drop is drop, our breaker block rather. So if we are in an uptrend and then you have something like this to the downside. Now, I am always saying it that for our secondary point of interest, if we have momentum, that is when we are expecting market to come to our secondary point of interest for a reaction and a continuation. You see, when market does something like this, you are not expecting market to use any of the secondary point of interest. You are just expecting market to come to your sponsored candle and then give you a continuation to the upside. But you see, when we have an impulsive movement to the upside, we are expecting our market at secondary point of interest. Now, our breaker block, we call it some people call it the failed order block. An order block that is here, an order block here, and market could not respect because of this momentum to the upside. Sometimes you will see market come back to that zone and then use that zone. So let's just go into chart, and I'm going to explain all of this on chart. I'm going to do this now. All right, let's get straight to our chart. This is volatility 25, and I'm going to be using the 8 hours time frame. Remember, points of interest are dependent on structure. If you've not learned anything about structure, I've had series of videos I've made on structure for you guys. You can check them out. Point of interest is dependent on structure, and ensure that you are also seeing it from the perspective of liquidity. Okay. So the first one we spoke about was our what? Our sponsored candle. So you can see this is a movement to the upside. Where was the area that initiated this buy move? Where was the last area that initiated this buy move? This was our sponsored candle. This is our sponsored candle here. It initiated this particular move to the upside. You can see it was the last black candle before this up move. The last black candle before the up move. That's the last down candle before the up move. And as you can see, it was the one that took out all liquidity. This was the last candle generated before we had this up move, before we had our break of structure to the upside. We have break of structure to the upside here. So where was the candle that initiated our movements to the upside? Where was the candle? So this is the first candle that initiated this move to the upside. And you can see the market gave series of movements here. And as you can see, this particular sponsored candle has been tested by this low. This has tested this particular candle. So we had this move to the upside, and then we had a comeback into our breaker block. So this is a breaker block, guys. See this. You can see we had our first PMS to the upside. This was our first break of structure to the upside. Our first break of structure to the upside, right? Now, after our break of structure to the upside, where was the failed order block? Where was the order block market was supposed to use? It was this area. This area. This was the last candle that took out liquidity. This was supposed to be our order block, but no, this was the last candle that took out all other liquidity. So we are marking that out as our order block. This is our breaker block. This is our breaker block here, guys. Now, aside our breaker block, now most times for our breaker block, you are going to see another candle, a base candle or an interest candle that will be in alignment with your breaker block. For instance, we had our base rally. We had our base area here. So we mark out all our base area also in alignment with our breaker block. So this is our base area. See what the market did, guys. This is 8 hours time frame, don't forget. So we had a rally base rally. You can see the base, how the base was struggling. If you check the lower time frame for this particular move, you will see how the market was struggling with this particular base candle. It was struggling. The market could not give us a real movement. It was just struggling. After this impulsive movement, the market created a base candle and then created an up move again. So we had our rally base rally in alignment with our breaker block, and that was what the market used here. So we have another sponsored candle here. There was another sponsored candle here for the fact that we had this up move to the upside. This is an up move to the upside, and then our previous sponsored candle has been tested. We've tested our previous candle. You can see market has tapped into our previous sponsored candle. So the next sponsored candle we have at this range is this low. This is the low for our sponsored candle. This was the last down move that took out liquidity to the downside, and you can see market has not tapped into it. You can see this low could not get into this area. This low could not get into this area. So this is our sponsored candle. And also see this, we had rally base rally. We had rally base rally. But basically, I'm not going to be marking this base area. Why? You might want to ask why I would not mark this base area. The reason is because it could be used as an inducement for this sponsored candle. Given that this sponsored candle has not been tested, this sponsored candle has not been tested, so I wouldn't even bother myself marking out a base candle here. I won't bother myself marking out the base candle. So let's mark out our other block. Let's mark out our breaker block. So this area is our breaker block. This is our breaker block. And you can see the market reacting inside the breaker block. But I'm not going to rely so much on taking trades from this area, because it could just react inside. Market could just react inside the breaker block. Market could just react inside the breaker block, give a pullback to get into a particular zone, and then continue the move to our sponsored candle. So basically, I use more of sponsored candle. So you can also add any to your trading plan. So let's get more of sponsored candle and then breaker block, and also our rally base rally, our base candle. Now, like I said earlier, guys, this is not a rally base rally. This is not a base. This is not a base here. You cannot call this a base. No, it's not a base. You can see the market give that real move to the downside. So it is not a base. So let's mark out our sponsored candle for this area. Now you can see we had break of structure to the upside here. This is a break of structure to the upside. So where are we marking our sponsored candle? So where was the area we had our last down move before an up move? So this is our last down move before an up move. This is our down move before an up move. This is the last down move. This particular candle, this black candle to the downside, was our last down move. So I'm going to be marking it with the last white candle, this white candle here. You can see it was this last white candle that took out liquidity. So I'm going to be marking that last black candle with our white candle, and then I'm going to be marking that out. Remember, guys, I said your point of interest is dependent on your structure, and it is dependent on your liquidity. So you should look out for structure and then liquidity. I said earlier that this is not a base. This is actually not a base for me. It is just a normal movement. And as you can see, it did not give any range. And checking out this, you can see that this low took out this low. it took it out and came to tap into our sponsored candle using this low as an inducement. I marked this out for my students. It used this low as an inducement. Let me zoom it in for you guys to see, and I'm going to be marking it out right now. It used that low for an inducement, so let's mark out this low. It took out this low with a peep. You can see that, guys. That low was taken out with a peep because it is liquidity. Now, let's assume that particular low was a base candle. We would have marked it out that market would use that area. But here, market used our sponsored candle. Market used our sponsored candle for a continuation. I've marked out that sponsored candle for you. So let's go more into marking out our breaker block. Now, I would have marked out, this is my first breaker block because we had our BMS here. Hold on, guys. We have a break of structure to the upside here. This is a break of structure to the upside. That's a break of structure to the upside. Now, why I am not marking out this as my first break of structure here is because market might use this high as an inducement for this particular range. So this is my proper break of structure, and this is my first BMS after we've given our break of structure. So this is the first BMS, but this is our normal proper break of structure that signified to us that we are about to take this high. But this is the first break of structure here. So where is my breaker block? This is my breaker block here. This is my breaker block. And you can see it was in alignment with an interest candle. We are going to talk about the interest candle later, but you can see this other block. Let's call it other block. You can see this other block here. It was in alignment with our breaker block. See how market reacted well to it. But market reacting at a particular place does not signify that market is going to use that place. I always say it's that a PO high is just a reaction zone until market proves otherwise. I'm always telling my students this. A PO high is just a reaction zone until the market gives a confirmation. So until market gives you a confirmation, a PO high is still a PO high. So you can see market use this area, and you can see we had a very high drop here. So until market takes this high, that is when you are going to confirm that this breaker block will hold. But you can see how market reacted perfectly to it to give us a pullback, and then we had the continuation to the downside because we had a target that we are coming to our sponsored candle. So let's see more. Let's see if we can get more of drop based drop. So we have rally base rally. This is the base here. This is the base over here in alignment with our what? In alignment with our breaker block. You can see this is the base candle. And what did the market do? Market get into base candle. The market reacted and gave us a pullback. Market reacted and gave us a good pullback to enter into this drop base drop. This is a drop here. This is a drop area. Drop base drop. This is a base area here. This is our base area. You can see market gave us a drop base drop. So from this base, market reacted from this base to get into this base, and then we continue to the downside. You can see this is our base area for this drop base drop, and this is our rally area for this rally base rally. You can use it as a flip zone. It depends on you guys, and it depends on the set of rules that you've created for yourself. So we have our breaker block here. There's a breaker zone here, and it was in alignment with fair value gap. Like I said, PO high is dependent on different things. PO high is dependent on structure. It is dependent on liquidity. This is a void here. And you can see how markets use this breaker block for a continuation to the upside. So that's going to be all for now, guys. Keep living in the atmosphere of profits, and bye, guys.